It is the issue that just won't go away. Financial repression, aka manipulation. The issue seems to have resurfaced as of late with two recent trades we saw. First, a 24-ton gold sell on the COMEX, which caused gold prices to drop $30 from $17.40 to $17.10 in a matter of seconds. Followed the next week by another trade, which caused gold prices to drop $10 in a matter of seconds. In the latter case, analysts told Kitco News it was curious that heavy sell orders hit the gold market last Tuesday when New York and London markets were closed and at a time when Asian trading was light. Some analysts are simply claiming these are two examples of perfectly executed and timed trades, but some market bulls are screaming manipulation, stating that there was no move in the euro or dollar to justify such a move. Kitco News is determined to get to the bottom of this story, and joining me today is a guest who has joined me numerous times on the program but has never spoken openly and candidly about the topic of manipulation. Today, he's willing to go on the record stating that he has experienced and survived it firsthand. Joining me today is Vince Lanci. Vince, thank you so much for being with me.
Thanks for having me. Happy to be here.
Vince, obviously today it's a big segment, big topic. Let's start by getting your thoughts on these two trades I just mentioned. Do you think they are perfectly timed examples of trades?
Well, I think perfectly timed trades is the worst phrase you can use to describe these events. We're referring to, I believe, the $30 sell-off pre-COMEX open, and afterwards on December 4th, 12:45 a.m., the $10 drop in 30 seconds. To call these events perfectly timed trades is to say it's a good thing that somebody lost a lot of money selling gold. That's inaccurate. They're horribly timed trades. If someone needed to sell gold that was long gold, they sold it in the most thin hours of trading. That's horrible timing. You want to get out of your position during the deepest liquidity portion of the market. So perfect, yeah, perfect if you're trying to make people lose money. Not perfect. It was a horrible fill or execution.
So on that note, what are you alluding to, Vince?
What I'm saying is that perfectly timed is just an unthoughtful thing to say. I will say this. If someone has to trade at 12:45 a.m. when no one else is paying attention, or in between the LME and the COMEX open, which is the moment where everyone freezes as they get ready for the day, during these illiquid moments, they're trading, legitimately speaking, because they have to, not because they want to. A margin call comes in, a fund has to puke, possibly. It's the end of the year, and a producer realizes that he's underhedged. He has to sell 2 tons of gold. These are legitimate reasons for those sales, but those are horrible executions at that time of day. An example would be this. You own a house. When do you list it? You're going to sell it in the springtime when people are buying, not Christmas time. Who sells houses at Christmas time? Divorcees, people with financial problems. That's the point.
Okay, that's a good analogy, Vince. So now let me ask you this. When we had that $30 drop, I had a lot of viewers write in alluding to the M word, manipulation. But my question to you is, how come when we went from $17.20 to $17.50, a $30 rise, no one was echoing the same view?
And that is one of the reasons it's hard to take the manipulation bugs seriously. The market can be and is, markets can be and are manipulated in both directions. But I want to hear the voices just as loud crying manipulation when they're making money. And that's why the credibility of the gold manipulation people is not very high. They're right. They just don't know how to phrase the argument.
So let's pretend manipulation were to exist, Vince. What would be the purpose of manipulating lower?
Okay, so let's use those two events as examples. I'm not saying they're manipulation. There's no evidence of that. But and I'll give you a history of how this used to go down on the floor and then how it's translated to electronically. But to answer your question, who would be interested in manipulating a market lower? Okay. A fund or firm, be it a bank, hedge fund, whoever, that is short the market and needs an exit strategy, they're short, say, 2,000, 10,000 lots, will look to do what we call spoofing the market. That means selling it down on light volume so that they can hopefully or knowingly trigger stops of longs who don't have patience and must get out of the market. So let's say I'm a firm that's short 10,000 contracts of gold. And I look at the depth on an electronic screen, and between here and $5 lower, during this thinly traded time of the market, you only have 500 contracts on the screen. You spoof the market lower by sweeping it down $5 on 500 lots, and you cross your fingers, even though what you're doing is illegal, you cross your fingers because you do have risk that there's someone out there that's going to panic and sell and create a snowballing situation. Further to that, you also may be an institution that has clients, this is prop trading now, and this is what Dodd-Frank is all about, that has clients that have put exit stops on your book, and you can use your own clients to stop at your position. That's the first person or type of category that wants to manipulate the market lower.
Let's just back it up a second, Vincent. Let me ask you, have you seen this happen firsthand?
Well, I think the way to describe it to people who haven't seen it, because you can no longer see it, it's electronic, with the exception of using electronic footprints like the chart that I sent you. On the floor, you could identify manipulation in a market. You had to have a little bit of awareness and savvy, but spoofing a market would go like this. You're on the floor and a broker comes into the ring and he has an order to sell the market down. The order is given to him like this: sell me, make sure it's lunchtime when no one's paying attention, sell me 200 lots worst. And that broker at the time, if he didn't do this, he'd lose the business. He goes in and he says, how is the market? Silver was very susceptible to this. 6 bid, the broker goes, sold at 6. He picks the person who doesn't have a lot of contracts to buy. He says to the local, sold at 6, at 5, what's the bid? Someone says 2 bid, he says sold at 1, and what he continues to do is to bully the market down, and smart traders back off, and the price keeps going lower and lower and snowballs. Meanwhile, that client of his upstairs is probably pricing to buy 1,000 lots from another bank. Point being is the COMEX floor at that time was the tail, was the dog, and the trades upstairs were the tail, but the COMEX was only used for price information. The volume went upstairs. And that's how manipulation lower would happen on the floor. That's one example of spoofing the market.
So, Vince, in your opinion, how often is this still occurring?
The exchanges and the government believe that they have the magic pill to stop manipulation, and that magic pill is electronic trading. So where there once used to be a broker who verbally intimidated and screamed at you and offered the market down and had people run away from him to get the price lower, at the behest of his client, mind you. You often hear phrases like bang the close, same idea. So you remove the broker from the equation. Now the trader is operating directly through an electronic screen. How does he do the same thing the broker did for him? Well, instead of using a market order and putting in the order electronically on the market, you replace the word spoof with sweep. So if I have 1,000 lots to sell market and I hit a button, right, those lots will be executed at market price. So they'll just be offered lower. If I want to be careful and get the best price, I will delay electronically. I'm selling 1,000 lots, lower your price every half second. There are all kinds of things that you can do to assure that you get a better fill. Now, if I'm a trader or a customer of the exchange and I want to execute an order and I need to get it done, legitimately need to get it done, I will use what's called a sweep button. I will line up the amount of contracts I need to fill, 1,000. I will line it up, go down the screen, and that'll say, oh, I'll look at the depth, 1,000 lots will be filled, $5 lower. I will hit the sweep button and I will be filled. All those contracts will be filled at those prices before the market can react. But you do it on a thin market and you create a problem.
Vince, so I know a lot of our audience members have written to me asking if you're part of the Illuminati because you just seem so plugged into everything. But I would like to know, how come you know so much about this topic?
I've been in the business. I've been a trader in commodities, primarily commodity options, for 20 years. Is it 20? Oh, goodness. Anyway, I witnessed these manipulations on the floor. You witnessed the behavior and the tactics. About 3 years ago, I wrote an article for Zero Hedge about how silver was manipulated by Fibro Hire. I ghost wrote that, but that was an experience that I went through. I had the experience of trading through the Sumitomo scandal. That was a manipulation. The Ashanti gold crisis, there was manipulation involved there. I was in these pits trading, watching these things happen. When Fibro exercised out of the money calls, that I almost lost my career because of that. I was on the receiving end of many manipulations at the trader level, manipulations at the broker level, manipulations at the warehouse level, where firms would claim that they were taking silver out, but they never took it out. And I was also guilty of manipulation. I had an instance where in 2003, I was suspended from the NYMEX because I was the settlement committee chairman and I settled options. What I was accused of and had to leave the floor as a result of is what banks do every day with the government's blessing. I'm not saying I'm a perfect person. What I am saying is that banks don't have to mark their books to market. They can mark them to fantasy. But me, as a trader on the floor, I had to mark my books to market. And if I changed the settlement, I was manipulating. I'm not arguing that point. But banks manipulate their own settlements to lie about their balance sheets. So I feel uniquely qualified from both sides of the coin to talk about this.
So Vince, you've been on our program numerous times. You're one of our most popular guests. Why now? Why go on the record with this now?
It was a confluence of events. Many of my friends and traders in the industry said gold is manipulated lower. And I'm tired of hearing it because gold is manipulated lower and higher. All markets are manipulated. And I think it's time to start discussing the tactics and the levels of manipulation because no one wants to define it either. The other event was an article that I read on a blog that I have written for in the past, Zero Hedge. There was a chart by Nanex that encapsulated what has frustrated, I think, many market participants. And third and finally, there are going to be less investors in futures because of this. The government is now backing exchanges implicitly. They need to put some teeth in their rules. They have an uphill battle to protect the integrity of our market.
So basically, Vince, you're concerned for the industry.
Yeah.
Right, but if I had to water it down, is it correct to say that you, Vince Lanci, believe manipulation exists?
It happens at multiple levels. That's the reason it has to be discussed. It's at the tactical level with the trader. It can be at a corporate level. It can be at a government level. But you have to be specific what you're talking about and stop crying every time gold goes down.
Okay, Vince. So manipulation is a mammoth topic and it can happen at various levels. We could talk about it from a country level, from a policy level, from an institutional level, and I'd like to narrow it down for our audience. So what do you think about manipulation in general?
I think manipulation occurs at the granular level where a trader is executing, and I believe manipulation occurs primarily in the macro sense at the regulatory level where companies lobby the government to have rules affected in such a way that they can continue to do what they're doing. legally.
Okay, so just holding on that thought a second, Vince, I would like to share a quote with you from James Grant. He's the publisher of Grant's Interest Rate Observer. He was recently on Bloomberg in an interview. He was speaking about the appointment of Mark Carney to the Bank of England. And on that note, he was saying if the job description was simply converting gold into banknotes and banknotes into gold at the statutory rate, someone in the UK could do that and have done that for most of 300 years. When you have to be a market manipulator, a sidewalk superintendent for all of global finance, and when you have to be a propagandist, these are complex jobs. Therefore, they had to go to Canada. James Grant obviously alluding here that he thinks central banks do manipulate. What do you think about these comments?
He's absolutely right. If you intervene in a market to protect your currency or to weaken your currency, if you intervene in a market, you're manipulating it. All fiat currencies are manipulated. It's a question of, is manipulation bad or good, if you're talking about evils. So yeah, he's absolutely right.
So on that note, does the government purposely keep the price of gold down?
No. The government does not directly keep the price of gold down. Not directly. That's ridiculous. They're too busy manipulating the dollar.
So do corporations manipulate gold as a policy?
I'm going to say no, and here's why. Corporations don't announce, let's keep the price of gold down. Corporations exist to make money. They will do what they must to maintain profitability. And if they are short 10,000 contracts and have more money than you, they will assess the pot odds, think poker, and bluff every pot of poker until you and I are broke and they have covered their shorts. And they borrow at 0% from the government. So corporations don't manipulate. They try to make money.
Okay, I'll keep going down my list. Do individual traders manipulate markets?
Yes, absolutely. The individual trader is the agent of the corporation that says to him, make money. And the way the regulations have been set up by the government, which have been lobbied by the corporations, the trader says, oh, the easiest path to make money is to short X or buy Y. And they usually do this with the knowledge of at least their immediate superiors. Yes.
Okay, and do countries manipulate gold?
Well, I said no to the U.S., but I will say this. If a country has a desire to buy gold, they will do what they can to keep the price down so they can buy it. So I would say China would manipulate gold lower to buy it. Central banks will manipulate gold indirectly by moving their own currencies around, but central banks don't care that much about gold right now.
So a country not revealing perhaps the truth about their reserves, that could also be a form of manipulation.
Absolutely, sure. If tomorrow we wake up and China says, oh, by the way, we have 10 times more gold than we said we did, yeah. Yeah.
Last question, are there any other ways gold can be manipulated?
Yes, and this kind of harkens back to the corporations. Corporations don't have policies to manipulate gold. It has to do with regulations. Keeping gold, an example. Through regulations, gold is manipulated lower. If you keep gold as a tier 2 asset, you are manipulating the price of gold lower because a tier 2 asset is only allowed to have a 50% cash value on a bank's balance sheet. So what is a bank going to do? They're going to sell it, take the cash, and buy something else. And that puts the IMF, OECD, and every central bank on the book, and every corporation that lobbies to manipulate the Dodd-Frank laws to make things easier for them to do what they've been doing.
Okay, just a final note on corporations. If I have to bring up GATA, the Gold Antitrust Action Committee, whose main mission is to expose manipulation in the gold and silver markets, they use JP Morgan as their poster child when they're looking at the big silver short right now. So what do you think about theories like that?
Let's assume one thing for a fact, and then we'll go from there. Let's assume JP Morgan is short 10,000 contracts of silver. Did they short those contracts to get the price of silver down? No, they shorted those contracts because they thought the price of silver would go down. Would a trader who has a position that's short 10,000 contracts be apt to sit on it, to spoof it lower, to sweep it lower, just so he can keep a lid on it to get his opportunity to cover his shorts? Absolutely. But to accuse JP Morgan wholeheartedly of manipulating the silver market as a policy is ridiculous. I think.
We'll have more on manipulation with Vince Lanci because we'll be looking at individual examples with Vince. Vince, thanks for your time today. Thanks for being so candid and open and revealing this on Kitco News.
Thank you so much. I'll talk to you soon.
And I really hope you enjoyed this installment of Reset with Vince Lanci. I'm sure you're going to have a lot of emails from me, and you can send those my way at newsfeedback@kitco.com or tweet me at Daniela Cambone. Thanks for watching.